Okay, we'll go ahead and get started here, everyone. Pretty much the market has been sort of in a reasonably narrow range since we signed off at 11, which was up here, and it came down a little bit, got in a messy middle here, then went back up a little bit, and then came down until about 2 o'clock here. That's when that report came out. So it was coming down a little bit there. And the yellow line, by the way, is yesterday's close. So we were slightly above that and going around on that. Came down, as Loretta said, pretty strong here at 2:30. Don't know what that was, and has come down here some more, and it's down quite a bit. Q's down $1.55 right now. The general markets, Dow's down 79, Nasdaq's down 75, S&P's down 20. So everything's down here since those reports came out. Anyway, so let's go back here a minute. The slight material I was going to present today is, let me move it over here and see where that's going to show up. There we go. Make sure that you're seeing that. Yeah, so I want to talk about, we talk about cent gains, that how much cent gains we have during the day. I think Tim was like plus 79 or 69 today, and mine was up $1.01. And they're not apples to apples because a lot of that depends on the price of the option itself. So I thought I'd put just a quick explanation in here. So the cent gains just tell part of the story, but the percentage gain, that's what's the real key to this, a real test for evaluating the success of a trade. And it's actually fairly simple if you're not familiar with it. So the gross percentage gain is simply the closing price minus the opening price and divided that by the opening price. It's as simple as that. An example for that, for one of them I did yesterday, I closed it for $7.14, opened it for $6.76, divided by 676, and that gives me well, I don't know why I have closing price here, but it's a 5.6% gain for a gross gain on that. Now the real actual one, so that's going to get you like 98% of the way there. The net percentage gain is really what you want, and each one of us is different depending on what our fees are for the trades. But you want to do the closing price minus the opening price, then you subtract off the fees for that, then you divided that by the opening price. That actually gives you the net percentage gain that you actually realize in your account. So anyway, that's a real quick way for determining apples to apples in percentage gain for different trades. And I have from yesterday's trades, Tim's trades are on the left. He was doing today's actually expiration yesterday. And these were his opening prices down in the $3 kind of range. Closing prices here, and his dollar gain or cent gain here was here, which was a total of 94 cents yesterday. And you can see the percentage gain that he had on most of these. In my case, I was trading next Friday, that is a week from Friday's expiration on the 13th, and mine were about twice as expensive as what Tim was trading. And so I had like $6 to $7 opening and $7 closing. And so my gains were 38 cents and 41 cents, which you say, oh man, that's a lot better than what Tim was doing. But once you start looking at the gross gains on it, it's about 5.6 and 5.8%. So if you compare like the first line Tim had at 5.8%, his only had to go up 18 cents before he got that gain. Mine had to go up 41 cents to get that gain. And so in reality, Tim was getting 28%, I was getting 11%. Now, I only was able to do 2 trades because I was away at meetings the rest of the day. So I probably would have traded at least one more of these trades yesterday. I think I talked about it before I left at 10:30 yesterday, and so total gain for the day probably would have been up in the 20s or close to 20 with that one other trade that I would have done, but woulda, coulda, shoulda. I didn't want to be in a trade when I was going to be away from my computer, so I opted not to do that. But still, to get 11% in a day, I'm very happy with that for that. And that 11% is all based on the amount that you're trading. And I did not put a chart together on this, but I think both yesterday and today I was trading 14 contracts, which is about $10,000 at risk per trade. And Tim, I think, trades about 100 contracts, so his is going to be up about what, $30,000 for his trades if he's trading 100 contracts. So anyway, that pays into it for the dollar amount gain. Tim talked about that this morning. So to calculate the total dollar gross gain, you take the gain, which is 38 cents here. You do that times 100, because that's 100 shares per contract. And then you multiply that, in my case, by 14, because I was doing 14 contracts. So that would have been $532 on this first line gain, with a $10,000 roughly at risk. So that's how you do that. And that's really all I had to talk about here. Just want to make sure people understood. And a lot of you have been around trading for a while, and you understand this for gains and how all that is figured into it. But for those of you who are new to this, I thought I would throw this out there to help you out. So hopefully that makes sense. Let me see if we have any. So we did have a question. Hey, Keith, what is keeping this thing from going through the floor? Well, you got to have buyers and sellers, and so that's what's keeping that. We'll look at those charts here back in a second. Any other questions on the percentage stuff that you would have? You can unmute yourself or type it in the chat box, either way. Okay. All right, and this is recorded. I think I'll have to get it to Tim, but he'll put it out on the YouTube, on his YouTube site. Let me